Okay, let's talk about the 10-column worksheet. It's a tool that accountants often use at the end of the period to check and make sure they've got everything right, they haven't missed anything. And it's a great learning tool because it puts steps 4, 5, 6, and 7 of the accounting cycle all on one page. The bad news is it's really tedious to do by hand. And when I learned accounting, I used to ride my dinosaur to school, and we would do these things all day long. Nowadays, they don't come up that often, but it's still a good learning tool. So let's do a quick, simple 10-column worksheet. First of all, why do we call it a 10-column worksheet? Well, you got 2 columns for the trial balance. That's from step 4 of the accounting cycle. You got 2 columns for the adjusting journal entries. That's step 5 of the accounting cycle. You've got 2 columns for the adjusted trial balance. That's from step 6. 2 columns for the income statement and 2 columns for the balance sheet. Remember, in step 7 of the accounting cycle, we create our financial statements. So you've got 2 plus 2 plus 2 plus 2 plus 2 gives you the 10 columns. Now, to help us see what's going on, I've put titles up here: balance sheet accounts and income statement accounts. In real life, you probably would just have a bunch of accounts listed, and they would be listed in that order: the balance sheet accounts at the top and the income statement accounts at the bottom. Then what would happen to us in the old days when we did this stuff on paper is we would forget to leave enough rows up here, and we'd get to a certain adjusting entry and we'd have to add a balance sheet account down here. Nowadays, that's not going to happen because we're all using Excel and we all know how to add a row up here to get another balance sheet account. But you may see in your homework a balance sheet account hanging out down here at the bottom. Watch for that. That's kind of a trick. Shouldn't happen anymore. All right, so the 10-column worksheet is going to take us from the trial balance to the income statement and the balance sheet. So let's pretend like this company only has 2 adjusting journal entries at the end of January: rent expense for $1,000, and they've got to accrue for some revenue that they earned but have not yet booked. So the journal entry for the rent expense, look up here, you see they've got prepaid rent, is debit rent expense for $1,000, credit prepaid rent for $1,000. It's an adjusting journal entry, so there's no debit or credit to cash. We book rent expense, expense to debits, expense to debits, expense to debits, and we reduce the asset prepaid rent. If assets increase with debits, they decrease with credits. The second is to accrue for accounts receivable, some revenue that we've earned that we hadn't yet booked. Debit accounts receivable is an asset. And credit consulting fees earned. Consulting fees earned is a revenue account, and it increases with credits. So then let's post those guys into the adjustments column. Debit rent expense for $1,000, credit prepaid rent for $1,000. Debit accounts receivable for $500, credit consulting fees earned for $500. And then we'll strike a total down here at the bottom of columns 3 and 4. And sure enough, in this simple example, we have $1,500 worth of debits and $1,500 worth of credits. Okay, that wasn't so hard. Now comes the only treacherous part, the only danger zone of this whole process. We have to take our numbers from columns 1 and 2 and adjust them by columns 3 and 4. For example, what happened to cash? Well, remember, adjusting journal entries never affect cash, so nothing happened to that balance. It remains at $100,000. But what happened to prepaid rent? It had a debit balance of $12,000. We credited it for $1,000, so it has a debit balance of $11,000. What happened to supplies? Nothing. It had a $3,000 debit balance. We didn't adjust it, so it should have a $3,000 debit balance. What happened to accounts receivable? It had a 0 balance at the trial balance level, and then we debited it for $500 to accrue for that earned revenue, so now it has a $500 debit balance. In this example, nothing happened to owner's capital, so its $98,000 credit balance carries over to the adjusted trial balance. And we'll do the same thing for the income statement accounts. Notice how consulting fees earned went from a $19,000 credit balance plus $500 to a $19,500 credit balance. Nothing happened to salaries or telephone expense, but rent expense from a 0 debit balance plus $1,000 gives us a $1,000 debit balance. All right, so let's add up the totals of debits and credits in the adjusted trial balance. And sure enough, we have $117,500 worth of debits and credits. So we're on the right track. And what's going to happen when you do a complicated one of these is this is where you're going to mess up. Some of these numbers aren't going to carry over just right, and you're going to discover that you have more debits than credits or vice versa, and you have to go back and figure out what you messed up. The next step is super easy. We just carry over the income statement accounts to the income statement columns 7 and 8. And these aren't going to total the same amounts of debits and credits because remember, revenue minus expenses is net income. So unless we exactly break even, we're going to need a debit or credit to balance this out. And that's our net income. How much is our net income for this company? $19,500 worth of revenue in January minus $3,000 worth of expenses means our net income is $16,500. And sure enough, when we add that net income over here, our debits are $19,500 and our credits are $19,500. And the last step is super easy. We just pull over the balance sheet accounts, put them into columns 9 and 10, and it's not going to balance either because we haven't added net income to owner's capital. Remember, owner's capital at the beginning plus net income minus owner's drawings gives us owner's capital at the end. Well, net income is $16,500. We need to add that to the right-hand side of the balance sheet. And sure enough, when we do that, we have $114,500 worth of debits and $114,500 worth of credits. And that's all there is to the 10-column worksheet. The tricky part is taking the trial balance and correctly adjusting it to get the adjusted trial balance. It's real easy to make a mistake when we create the adjusted trial balance. And for example, to see $12,000 here, $1,000 here, and think that our prepaid rent now is $13,000, when in fact it was a $12,000 debit minus a $1,000 credit, means we have an $11,000 debit balance. But you have a check down here at the bottom all the way along to make sure that you've done everything right. And that's all there is to the 10-column worksheet.